And it's time for another Macro Monday where I get you ready for the week ahead in 5 minutes or less. We have a lot to cover today, so I'm going to be stretching that number. Before we get into it, just a reminder, this is just a small snippet of our full Macro Monday newsletter. So if you want more in-depth coverage of the week ahead, I will leave a link to our full edition in the description of this video. So definitely check that out. As always, we will start with the chart of the week. And yes, we are still focused on employment and inflation. This week, we'll be closely looking for signals regarding employment and inflation, which are still our two most consequential themes driving the markets. In that vein, on Tuesday, we'll be looking at the CPI report and average hourly earnings data. And historically, these two series have shown a strong correlation, and lately that relationship has grown even tighter. Put simply, a tight labor market tends to be inflationary through an increase in wages. Of all this week's data, hourly earnings could end up being the biggest market mover. The Fed certainly has taken a more dovish tone in recent weeks, but if tight labor markets lead to inflation, or as we're about to discuss at length, tariffs come back on the table, that could throw a wrench into the Fed's current dovish message. And that brings us to this week's key economic data releases. And to be honest, the biggest thing this week isn't on this calendar, but first we are going to start with the calendar. Not every week delivers a pivotal macro data, but this one does. Between July's regional PMIs and June's inflation data, we'll get some early clues about how tariffs are flowing through supply chains and influencing price levels, hiring, and capital spending. On top of that, we have some releases that we really enjoy. On Friday, I'll point you to Michigan sentiment at 10 a.m. Again, the two regionals, we have Philly on Thursday and Empire on Tuesday. We have the inflation data Tuesday, Wednesday between CPI and PPI. And then finally, also on Thursday at 10 a.m., we have the NAHB Housing Index. If you've been following our work for a while, you'll know that we follow the housing market closely. But the big news of the week, President Trump kicked off the next chapter of his trade saga by issuing formal letters to many nations outlining their new reciprocal tariff rates. These are set to take place on August 1st. Some notable ones I want to point out. Again, this is moving. As you guys know, this could change by the time this video comes out. But as of now, it's looking like 25% for Japan and Korea, 35% for Canada, and then a 15 to 20% blank tariff for most other trading partners. The real headline grabber for us was a 50% tariff on copper. However, despite these announcements, market volatility has stayed subdued thus far, and this is much different than what we saw during the initial rollout of the tariffs back on Liberation Day. Some have credited this reality to the taco trade, and if you don't know what that is, honestly, I'm a little jealous of you, but I am going to spoil your naiveness right now. The taco trade originated online amongst investors and stands for Trump always chickens out. This is the idea that Trump would announce some big policy, the market would crash, and then in response to the market crash, he would roll back that announcement, and the market would then spike. So those who noticed started to buy the market on those big dips, thus the taco trade was born. I believe he even responded to that in an interview. But right now, we see that the market isn't budging at all. So is that because the market assumes that Trump is once again going to chicken out, or is something materially different about this rollout? We don't know for sure, but personally, I'd be wary of thinking Trump is 100% going to chicken out this time. Between markets currently sitting at all-time highs and the recent passing of his main policy initiatives in the big, beautiful bill, Trump might have a bit more confidence this go around to see things through. And again, the market is expecting him to chicken out. Generally speaking, I don't know. We'll see. And that's what I'm leaving you here today. Thanks for watching. I hope you had a great week. Looks like I'll just hit 5 minutes. Don't forget to subscribe, and I will see you back here next week for another Macro Monday.